Donald Trump says he may offer car makers some relief from tariffs as he looks at what to do to help car companies make more of their cars in North America and need more time to adjust their supply chains and move more activity home. Shares in the Detroit three car makers Ford, Stellantis and General Motors rose yesterday, with GM and Ford each up about 4%, and US listed shares in Chrysler, parent Stellantis gaining 5%. But surveys are also showing that nearly half of respondents see reshoring as too expensive and would more likely double their costs, and as such, it seems that they are kicking off a new global search for low tariff regimes. We will see if a lower tax regime and lighter regulations in the US reduce the cost of reshoring. Still too early to say. Hello and welcome to Global Business Insights, where we bring you more depth on the latest business headlines. And thanks for your time. And please do send in your comments. In the first quarter of 2025, Goldman Sachs beat expectations, posting profits of $4.7 billion. Its equities division had a record quarter, with revenues up 27% in the first 3 months of 2024. Rivals JP Morgan Chase and Morgan Stanley also reported strong results on Friday. Sales at the world's biggest luxury conglomerate LVMH fell in the first quarter. Revenues in fashion and leather goods, its largest division, were down 5% from a year ago. Even before the trade war, luxury sales were declining, as LVMH also commented on the disrupted geopolitical and economic environment in its quarterly report. US stocks closed positive in a choppy session yesterday, helped by a rally in technology names following the surprise US tariff exemption. Yet Wall Street remains braced for another week of potential tariff-fueled ups and downs. Volatility is guaranteed as the tariff headlines present new developments every day. The U.S. Federal Trade Commission told a court yesterday that Meta's acquisitions of Instagram and WhatsApp helped give it monopoly power. This was at the beginning of a trial that could force the tech giants break up. We've heard that many times before. FTC lawyer Daniel Matheson argued in his opening statement that Meta frustrated competition from Instagram and WhatsApp by buying them in 2012 and 2014 for $1 billion and $19 billion respectively. Pfizer will halt its development of danuglipron, a weight loss drug that was being closely watched by investors after a patient in one of its trials experienced potential drug-induced liver injury. After sales of its vaccine and other coronavirus-related products fell following the pandemic, Pfizer is looking for a new breakthrough drug, and focus is on weight loss drugs. Chinese electric vehicle battery giant CATL's Q1 net profit grew at its fastest pace in nearly 2 years, while a rise in revenue ended 5 straight quarters of decline. Net profit in the first 3 months in 2025 rose 32.9% year on year to 14 billion yuan. That's about $1.91 billion. Revenue was also up 6.2% at 84.7 billion yuan. Nvidia is planning to build AI servers worth $500 billion in the US over the next 4 years, with help from partners such as TSMC, as it shows support for more local manufacturing. This includes production of its Blackwell AI chips at TSMC's factory at Phoenix, Arizona, and supercomputer manufacturing plants in Texas by Foxconn and Wistron. Ghana has ordered foreigners to exit its gold trading market by the end of the month, as it looks to streamline gold purchases from small-scale miners, increase earnings, and reduce smuggling. Ghana is shifting away from a system in which local and foreign companies with export licenses can buy and export gold from artisanal or small-scale mining Under the new system, the newly created Gold Board, known as Gold Board, is the only entity allowed to buy, sell, assay, and export artisanal gold, and older licenses have ceased to be valid. Foreigners can, however, apply to buy or take off gold directly from the gold institution set up by the government. Lesotho Communications Authority LCA said in a statement that it has granted a license to Elon Musk's Starlink to operate a satellite network and provide satellite internet services in the country for 10 years. My deep dive is on a survey of boards which recently found that global CEOs were already unhappy with the support they were getting from their boards of directors in navigating what they saw as more of an environment of uncertainty. According to this survey, 22% of the corporate chief executives surveyed, that was in late 2024 by the consultancy Spencer Stuart, felt their boards were providing the help needed in an increasingly uncertain business environment, and that more from the boards increasingly expected. Another survey by another research group, the Conference Board, found that over the last 7 years, financial performance and most notably a company's stock price have become a stronger predictor of a chief executive's ability to hold onto the job. It found that 42% of S&P 500 companies replacing CEOs in 2024 had bottom quartile returns. As companies are increasingly stressed in a more difficult environmental context, CEOs are looking more to their boards for counsel and expecting more contribution and expertise. Boards are now firing more top managers on behalf of shareholders if they underperform. Then, of course, you have activist board members who represent the interests of shareholders and do play a role in shaping what the company stands for. Interestingly, most CEOs, especially in emerging and developing economies, still see their boards as support to keep them in their jobs and do not appreciate the role of the board to work for shareholders to ensure CEOs are performing as expected. More so, in developing economies, it is almost unheard of to have boards acting to fire the CEO, as most board members are rubber stamps and feel beholden to be loyal to interests that preserve the CEO's position. It does present an interesting dynamic. For family businesses, boards are even more expected to be loyal to the family patriarch, and shareholders are not aware that they are investing in an environment with inadequate independent board representation to protect their interests, especially when those interests clash with the family or founder perspective, which can happen where there could be many related interests playing out. According to the survey, there is also a trend globally of more active board members. In normal times, the quarterly advisory nature of boards is just fine, but in the more volatile context, board members need to have an all-hands-on-deck attitude in collaborating with the CEO to deliver for shareholders. The demands have increased to fill boards with active CEOs, though the count of active CEOs and boards have declined. What is evident in a new dynamic environment is a board that complements the CEOs in making very critical decisions that require more savvy, not just in narrow technical areas, but in wider geopolitical, governance, and supply chain issues. There is also an increased demand for external specialist advisory support to complement decision making and to appraise the value board members and the CEO bring to the table. Interesting times. Tell us what you think and how the environment may be shaping board level dynamics from your experience. How, for example, does a board manage a CEO who is no more suited to a vastly changed context? Boards are increasingly doubting their CEOs, and CEOs also feel they're not getting what they should from their boards. How is this working out on your board? What has been your experience in using external consultants to assess board level individual performance? In short, the trend is for boards to be more under increased pressure to deliver for shareholders than what we've seen before in what you could describe as a more difficult environment. Later today, we get more earnings announcements. Bank of America, Citigroup, Johnson & Johnson, and United Airlines among corporates that will be releasing their Q1 results. Advanced Micro Devices Chief Executive Lisa Su said yesterday, following NVIDIA and others, that it is ready to start chip production at its Arizona plant and will certainly make more AI servers in the US. The UK recently suspended tariffs on 89 products, including items like electric vehicle batteries, pasta, fruit juices, and construction materials such as plywood and plastics. This measure was to support businesses and consumers by reducing costs and boosting growth. The suspension will last until July 2027 and is expected to save UK businesses around £17 million annually. Chancellor Reeves also announced a £20 billion increase in government-backed financing capacity, that was on Sunday, to help companies contend with the global trade war. UK Prime Minister Sir Keir Starmer hopes the lower costs for producers will trickle down to consumers. Still in the UK, the vast majority of UK consumers plan to buy British over concerns that imported products will surge in price after Donald Trump's tariffs. According to the survey carried out on behalf of Barclays by Opinium Research, 71% of people said they wanted to support UK businesses by buying more items that were made in Britain after the US imposed a 10% tax on British imports. About 2/3 of consumers were concerned that imported products would eventually become costlier, and 2 in 5 were already looking for UK-made alternatives. President Cyril Ramaphosa has picked Mshebisi Jonas as special envoy to the US in a strategic move to facilitate more direct and flexible engagement with key stakeholders within the US administration. Jonas' appointment is part of steps to reset relations with the US, which have deteriorated in recent months, while positioning South Africa's interests at the forefront of bilateral discussions. The US administration froze $2.2 billion of federal funds for Havard University after it became the first major institution to reject policy changes such as screening students for anti-Semitism. Harvard University say the changes infringed on its independence. Asia-Pacific markets mostly higher today, tracking Wall Street, which saw all 3 key benchmarks up on a tech rally. European markets also opened higher amid optimism of a respite from higher US tariffs. Crude oil market participants are digesting implications of indirect weekend talks between the US and Iran, described as constructive with further talks planned. This may lead to removal of some of the sanction risk affecting oil markets. Brent crude was flat most of yesterday, under $65 per barrel, as prices seem to be seeking direction as tariff pressures on economic growth outlook eased somewhat after exemptions were granted by the US administration. Well, that's all on Global Business Insights. Thanks for watching. Remember to send in your comments. This is Bode Oshosami. Bye-bye.